recording, and I'll give the go ahead. Okay, Bob, I think, yes, we're recording, so we're good to go.
Okay, thank you. So today I want to talk about the fact that on August 8th, which is last Friday, President Trump put forth some executive orders. And a little background on this is that, as most people have read in the paper, the major stimulus of unemployment federal subsidies of $600 a week expired on July the 31st. So the House Republicans and Democrats were trying to negotiate an extension of relief because the virus continues to plague the economy and unemployment. So bottom line is they weren't successful, and I think they've broken off talks, and maybe they're considering going back. So so the backdrop on it is that to try to bridge the gap here, because $600 a week for an unemployed person is a lot of money. And this is in addition to the the state subsidies. So normally when you go on unemployment, you file, you answer some questions depending upon how many dependents and so on that you have. They know what your gross salary was before you got unemployed. And the state goes through some metrics and calculates, and usually it comes out to maybe 1/3 of your payroll check. So as all of us know, 1/3 of your payroll check would be pretty devastating to try to live on. So the federal subsidy of $600 was in addition to the state. So in some cases, that federal subsidy actually was equal, if not exceeded, the gross pay of the individual. And so the Republicans were arguing that in a lot of cases, this was a disincentive for people to go back to work. But so what the president did and what they were trying to do was to get some type of a program in there for not $600 a week, but something that was more in line to what the payroll was for the individual, to scale it. So giving $600 a week to an individual that only makes $20,000 a year versus someone that makes $100,000 a year is a big difference. And they were trying to scale the amounts on it. So what he ended up doing was doing an executive order that instead of $600 a week, they settled at $400 a week. $300 a week was coming from the federal, and he was requesting the states to put in $100 of that. And so that's effective actually August 1st for that to actually be put into place. Now, keep in mind the $600 a week has fallen off, and I think they're going to try to go back and make a retro. The other big issue is when is that really going to kick in? How long is it going to take for this $400 additional unemployment to really kick in? Part of me thinks that they've already did the 600 and the infrastructure is in place for that, but we're going to have to see how that really pursues. The second executive order that he signed on August 8th was one that's called Deferring Payroll Tax Obligations. And this is really something that's brand new, that hasn't been in existence as far as I can remember. But basically, this is giving an employee that is employed a net raise, not in gross pay, but in the net pay, because it's basically taking a 6.2% Social Security of their gross wages and basically deferring it. And the period of time they're talking about is September 1st through December 31st. So it's 4 months. And it's available for employees with gross earnings that are less than $4,000 biweekly or $2,000 a week. So anyone making less than that, this program was available for them. So that comes out to about $250 a pay period over 4 months. So that's like a $2,100 total benefit for the 4 month period. But also the benefit then goes to the employer, because in payroll taxes, the employer has to match the employee withholding. So that actually, the benefit is both for the business owner as well as for the employee. So again, their gross pay is not changing, but the net pay actually goes up that $248 per pay period on there. It's a deferral, and I think there might be a little bit of a political spin here, because Trump said if he gets reelected, he's going to push to have that completely granted, as opposed to being deferred until next year. So that was signed also on August 8th to be put in. The third area was relief from renters and homeowners, evictions and foreclosures was extended. So the previous status was the CARES Act and Federal National Mortgage Association suspended foreclosures for 60 days. And it was extended until August 31st on here. But the plan was to basically extend this suspension all the way through the end of the year, December 31st. So, as unemployment benefit of $600 a week was taken away, a lot of people are still struggling. I don't know if you guys have noticed, but the cost of food seems to have gone up because of the supply chain and the virus disruptions that have gone on. So right now it's expanded through December 31st of this year for the forbearance on evictions and foreclosures for homeowners and renters. The fourth executive order that was signed had to do with student loan payment relief. So the current waiver of the payments, as well as the interest accrual, was expiring at the end of September. The new order extends it to the end of the year, to December 31st of 2020. Now, what's different about an executive order versus actual law is that the executive orders can be challenged, and actually probably will be challenged in some cases. So they're not as solid as legislative changes that have been approved. So we'll have to see sort of how that's going to how that's really going to play out. But you can tell in some of these cases there's a little bit of political spin on this, since the elections are coming up, and we're just going to have to see how that is going to happen. So that's sort of what happened last Friday to try to keep this going for the unemployment for this. I forgot the number. Maybe Tony knows how many people are unemployed, but I thought it was like 30 million or 40 million people.
Yeah, we're still up in the 25 to 30 million range.
Yeah, so there is a lot of people still unemployed on here too. So that's what happened on the executive order. Any questions on that?
Hey, Bob, I've got a question on this deferral of payroll taxes. You mentioned, because I haven't read much about it, a certain salary level that it applies to. So this is for employers that have people that make a certain level of income. Is that correct?
Right.
Okay.
Right. Well, the goal was to try to benefit the people that maybe are a little bit lower pay. So what they indicated was $4,000 biweekly or $2,000 a week. So if someone is making $2,000 a week or less, they would be eligible for this deferral of the Social Security payroll tax. Now, keep in mind, this is only the Social Security piece of it. It's not the Medicare piece. So 6.2% is the Social Security benefit portion of it. The rest of it is really the Medicare tax that brings it up to 7.65. So it's just for the Social Security.
So how is that going to affect? I mean, it's a benefit for both the employer because they don't have to match that, right? And
Right.
the employee. And so will payroll stop deducting that amount for 4 months or continue and just give it to them and not send it into the government? I mean, I'm sure the payroll people, we need Bob, but you've done payroll. How is that going to work? I'm seeing this as a huge benefit for small business owners.
Well, it is a benefit in a sense. Again, remember, it's a deferral. It hasn't been granted as a give me. So Kathy, let's say, for example, let's say that you have someone in your office that makes less than that $4,000 biweekly per period. So what would happen is that if this was September 1st and this is the first payroll, you would, again, not change their gross pay, not change their federal withholding or state withholding. But what you would do is only withhold the Medicare tax piece of this thing, okay? So that's the 1.45%. So in effect, if it, let's say it's Joey, so Joey would get his net payroll would just go up. Okay, and of course, Joey would come to you and go, Kath, thank you very much. I mean, this is awesome. Thank you so much for the extra $250 here. And you say, you're welcome. But actually, Joey, write to President Trump because he's the one that did this for you. And Joey says, well, how long is this going to last, Kath? And you're going to say, well, it's going to go all the way through the end of December. And he goes, awesome. That'll be great. It's going to be a nice Christmas. Okay. So you as the employer, as you said, you don't have to match that. So you had that benefit too. Now, when you pay in your payroll taxes, you're going to be paying in less payroll taxes because you withheld less. So this really has to do with the payroll tax returns. And the other interesting thing is that this is for 4 months. So it's going to be 1 month of the third quarter and then all of the fourth quarter for payroll taxes. So your 941 returns. So this is something that's really more on the employer's side than the employee. I mean, the employee didn't do anything. He just is getting this extra money. Besides that, if for some reason he actually gets laid off, then he would actually start getting the extra $400 a week too. But it's a good question.
I just thank you for explaining that. That is very helpful. That's what I was asking. Like, how does this logistically work? So the payroll people just don't take it out. But then again, you mentioned it's a deferral. So do we both owe that back in who knows, right? Because
that's exactly my question.
That's like, how do you pay it back if it's deferred? So you're not actually deducting it and setting it aside. You're giving the money to the employee who, of course, is spending it, right? And the employer is saving that. But how do you ever make that up? That's the part I don't think anybody understands.
Well, here, let's say a client wants to do it, okay? And first of all, I'm not going to advocate it because I think it's kind of crazy, and I think it's kind of political, to tell you the truth. So I'm not going to, but let's say an employer says, listen, Bob, this is an executive order and it's in place and I want to do it. And I say, I really don't think it's a good idea. And they say, well, we still want to do it. So help me do this. What happens? I would tell them to set up a special account for this deferral of money. Okay. Set up a special account and don't touch it. Because as you know, if you don't set up the special account, it's going to go away somewhere, right? You're going to spend it. It's like anything else. If it's there, it's going to get spent. It's like that black hole. It just sort of comes in and goes out. So, I would tell them, set this up separately. If you really want to do it against my recommendation, go ahead and set up a separate account for it, and let's see what happens.
Yeah, that's interesting. So people have choice. An employer has a choice whether to defer or not defer. I mean, we're just kind of learning this.
And in essence, I suppose they don't because we have an executive order. Now, it's not law, but it is an executive order. So whether or not are they obligated to do it? I mean, I guess I could see the employer going to the employees possibly and saying, I could give you this net increase in payroll by law. That's what's in place. But you know what? You may need to pay it back. And I could see actually where the employees, where one wants to do it and one doesn't want to do it. Okay.
Very interesting.
Yeah, it's a very interesting dynamic.
I don't think
this has never been done.
Right, right. And it'll be interesting to see, like you said, if it's challenged or if it's extended. I would imagine that if people do it en masse, which would increase those lower income people below that 4,000 biweekly or biweekly, yeah, whatever you said, those
Yeah.
numbers, it would give them more money. And certainly coming into the, holidays and winter months and stuff, I think that would be helpful. But I wonder if they wouldn't just like forgive this 4 months
Yeah.
loan down the
Well,
road. Because how are you going to pay it back? I mean,
well, then let's take that. Let's take that scenario. So let's say that Joey wants to do it, and you say, okay, Joe, we're going to do it for you. And let's say you have a Shirley in your office, and Shirley doesn't want to do it. So now you got this money in this a special pot. Now January comes along, and now the law basically says, okay, it was a deferral. Now Joey needs to pay it back, and also Kathy, you need to pay it back as the employer. So now automatically you withhold extra money now from Joey's pay. So now he gets a decrease. Well, Joey's not very happy.
right.
Yeah. And is that something that you would have to, like, I have a payroll service, and if I don't want to participate, do I need to alert them? I mean, probably got to figure out what the procedure is, but is it something that they're going to do automatically, or is it something that they're waiting instruction from me?
My guess is that because it's an executive order and nothing else happens, the default would be that they would do it unless you opt out of it.
Yeah.
That's my guess.
Yeah.
If I was running a payroll company, I would say, well, this is an executive order. I basically need to do this, but you know what? I'm going to reach out to my clients and see if they want to do it.
Yeah, yeah. And then let's assume we do, like I said, I would opt out. I would rather, I don't want to have to end up owing money, but let's assume we opt out, they're taking out the 15.5%, and then they turn into a grant where they, forgive it. Those of us that opt out wouldn't get that money back, right?
Right.
Okay.
Yeah. So that's
made it good to the government.
That's sort of your risk, is that this eventually could be kind of a grant, similar to the PPP loan. I mean, this is like for the employers. I mean, believe it or not, I have a couple clients that did not apply for the PPP loan, and some of them were just of the mindset that nothing's for nothing. They just basically didn't trust the government that they would get this money and truly that they wouldn't have to pay it back.
Yeah.
And they just didn't do it. There wasn't many, but there was a couple that said, no, I opted out. And there was a couple that got it and then paid it back because they said, well, I don't need it.
Okay.
And even though they can get what they call loan forgiveness. Now that's the other thing that's going on right now. Are we good on time, or could I talk about
Carrie, you could talk about it because Carrie's not here.
Okay.
So she was the other speaker.
Yeah. So the other big item that's basically in place now is that the PPP loan, which is for the employer, it has nothing to do with employees. The employer PPP loan, the payroll protection plan. We've gone through the phase now where the applications for PPP expired on August 8th. So theoretically, you can't get a PPP loan any longer. You can get the what's called the emergency disaster loan, the EIDL loan from SBA. That's still available, but that's a separate program and separate interest rates. The difference is that the PPP loan is a loan that can be forgiven by applying. One of the things that was trying to be negotiated between the Democrats and Republicans, the Secretary of Treasury wanted to actually put in place automatic forgiveness of loans less than $150,000. That did not happen so far, but that was one of the things that was on the table. So now, in theory, you have to apply for loan forgiveness if you got the loan. So we have a lot of clients that applied for the loan, got it. Now, the second phase of this is that you have to do a separate application to say, if I met certain parameters, then that loan will be forgiven for me, okay? That portion of a loan that's not forgiven because of the metrics will need to be repaid at a whopping 1% interest rate. It's deferred for 12 months, and you got 5 years to pay it back. So it's really a great program. The purpose of that loan was to keep people on payroll. That was the purpose of it, is to, we want, and originally it was supposed to be only for 2.5 months because no one envisioned the virus going this long and impacting. So the purpose of that loan was to keep your people on payroll for at least 2.5 to 3 months instead of laying them off. That was the purpose of that money. So the metrics to get forgiveness have to do with, did you lay people off or did you not lay people off? Okay, so that's what, and there's other things that go into the metric about that. So we have until December 31st to do the application for forgiveness. If you wait beyond that, you're not going to have that loan forgiven. And you apply to the financial institution that gave you the loan. So if it was Chase Bank that was the loan processor from the SBA, then Chase Bank is the one that the business owner would have to go through to apply for this. Okay. A lot of the banks are just now getting ready to accept applications for forgiveness. And then the SBA also gave you an option to take an 8-week period of time to see if you met the metrics, or you could take a 24-week period of time to meet the metrics. They gave you a choice of whatever is best for you to apply and with the data to see if you made the metrics and basically got loan forgiveness. Okay. So that's sort of where we're at with that. The EIDL loan, as I say, was a separate program. It basically was to take over where the PPP loan expires. So the PPP loan, again, was supposed to give you enough funding to keep people on payroll for 2.5 months. The EIDL loan was to say, well, if you need more than that, beyond the 2.5 months, we can give you a separate loan called the EIDL loan. And that loan, again, the interest rate was not 1%, it's 3.75%. And that also had a amortization of like 30 years or something like that. It was really good. Again, good terms. No forgiveness on the EIDL loan.
Excuse me. All right, very good. Very
lots of stuff. Lots of stuff.
Yeah, real good stuff. Thank you for covering that. That was interesting. Like I said, I mean, I would